Okay. First of all, thank you all for attending this month's webinar with FX Street. Thank you, FX Street. Big apologies for last week. I know I was supposed to do this last week, but just as I was about to log on, okay, yeah. Okay. Just as I was about to log on, my internet connection went down, so I had to reschedule for today. So apologies for everyone who waited for me last week. And secondly, I've got a bit of a cold, so if I am sniffling through the webinar today, please forgive me. I do have my green tea and some honey in there, so hopefully that'll keep me going. But please bear with the sniffling and any sneezes that go on. Okay, so we are in the month of September, and regular followers of mine will know that I am a long-term trend trader. I look at the bigger picture, looking at the monthly, the weekly, and the daily chart. And because I embrace or I've traded this longer-term approach for quite a long time, what people will learn to embrace over time is that there is a natural rhythm to the market that has to be understood if you are to see consistent returns. Okay, is that better? Okay, that window, by the way, guys, that window that, let me just bring it up. Can I just get a quick yes? This window here that I'm moving around, is that the window that's sort of blocking everyone? Yeah? So if I move it to the top right corner, yeah, okay. That is the chat box. So when you guys are actually sending me any questions, etc., I need to look at that. So if at any point it's in the way of the screen, please let me know. But the most likely place for me to keep it will be in the top left corner so that you guys can see the screen. But I'll be moving it around. But that is the chat box, so I need to see it open. Okay, yeah, thanks, FX Boykey. All right, so I'll keep that closed for now. So going back to what I was saying, the markets have a rhythm, and we really need to embrace this if we want to see consistent returns, if we want to see consistent growth. And what I mean by that is this. Over the summer periods, the market tends to be very quiet. So June, July, August, the market tends to be very quiet because this is summer. The market makers, everyone's on holiday, everyone's taking a break. So the big dogs that actually move the market aren't moving the market. And so if they're not moving the market, we want to be staying out of the market. This is where we really want to go into capital protection. Now, you may have positions open. I have positions open, and I had positions open from before summer. Over the summer period, I've simply held onto those positions. And now that summer has come to an end and we are in the month of September, I'm now waiting for momentum to kick in and to see some kind of trend direction. Hopefully in the direction of the long-term trend before summer. Of course, nothing is guaranteed. Everything's playing on probabilities, but the trend is your friend. And that is the direction that we really want to be going in. Okay, so throughout today's presentation, what we'll be doing is looking at these few currencies that are on my watch list, breaking it down according to the time frames that I look at, so the monthly, weekly, daily time frames, and then beyond that, looking at where the trends, where these currencies could break it out and continue in the direction of the trend. I'll also be telling you where I've entered into these particular currencies, so you can see how long I've actually held on to my positions, and we'll then be looking at areas where when price breaks out, I'll be adding new positions. You'll have heard me say the word compounding. Other people know it as scaling in. Okay, so I'll be looking at where I'll be looking to compound and start accelerating the profit phase. Okay, so I like to keep things very simple. One of the questions someone put through a question before I actually started the webinar, which is, do I trade ranging markets? And the answer is no. I don't trade ranging markets because movements in any particular direction are short-lived and it doesn't allow me to compound. If I cannot compound, if I do not have the potential rather to compound, then I'm not going to be taking the trade. Compounding is where I get my growth, my exponential profit. Okay, so short answer to your question is I do not trade ranges, hence the title of my style of trading, which is trend trading. Okay. I hope that's clear. I'm now going to go into the analysis What you can see in front of you is a typical chart setup of mine. All right, so I have the watch list in the top left corner. Now, notice it's an extensive watch list. Aussie dollar, US dollar at the top, all the way down to the South African rand, Japanese yen. A very extensive watch list. I don't limit myself to the majors. I don't limit myself to the euro dollar or gold or the indices. I don't limit myself to any one group or any individual instrument or any even a market. I'm not an FX trader. This is something that it's crucial to get across. I'm not an FX trader. FX is one market that makes up my portfolio. But I trade US stocks, I trade UK stocks, I trade commodities. My preferred markets are FX stocks and US stocks purely because they're the most liquid. But I do look at UK stocks. I live in the UK, I'm in London, so I do look at UK stocks and, of course, commodities as well. Thing about commodities is that they may not do anything for a long time. They could just stay in range in consolidation, long, long periods of time. And suddenly there's a breakout and we have a trend. So, but commodities trend. Hence, I'm a trend trader and I will trade them. Okay. But of course, this webinar is for FX Street and we focus on the FX market. So going into the FX market, I have all the possible currencies that are tradable. And when it comes to exotics, I know I get asked this question a lot. I do look at certain exotics, such as the Singapore dollar, which I think trends very well. But I don't really get caught up in exotics too much, purely because there's a lot of erratic behavior. If you look at things like the Turkish lira or the Russian ruble, they can trend very nice, but then in a certain period of time, because of maybe some kind of political situation, the market can go crazy, hit stops, and then trend again. It's just not the kind of currency that I want to get involved in. I want smooth trends. And so I look at the majors and their crosses. They're generally the currencies that I stick to. Okay, but crucially, I have a big watch list. If I move to the top right corner, I have the monthly time frame. Now, on the monthly time frame is where I look for the major areas of support and resistance. So if I open up the monthly charts, you'll notice that I have a proprietary tool that highlights the major levels of resistance with the red line and the major levels of support with the green line. Okay, now I don't do this manually. The advantage to having good software is that the software will automatically update itself and automatically highlight the major areas of support and resistance based on the logic that I've set within the tool. Okay, it takes out all of that manual labor. It's crucial, guys. If you guys want to take, if you want to take your trading to a certain level of seriousness, or if you want to be able to ultimately generate a lifestyle from this, good software is fundamental. You'll hear otherwise, and you'll hear people saying that you can do it from software that a broker has given you, or I don't know, MetaTrader or any of these other free source softwares. The reality is that if you want to see changes, if you want to see results, you need good software. And this means paying for good software. Now, software doesn't have to be expensive. eSignal is not massively expensive. There is a cost, but it's not expensive. So start looking into software. By the way, guys, I'd like to add at this point here that I'm not endorsing eSignal. I don't have any affiliation with them. I'm endorsing them because I use them and I know how good they are. Okay, so do look at good software. Now, the second thing that I have on here are the pink levels. The pink levels represent the highest price, the lowest price, and the closing price of the previous year. So as we're in 2015, this represents the high of 2014, the low of 2014, and the closing price of 2014. Again, these are proven levels of support and resistance. Again, software will plot it on there for me. Just to show you the strength of the software, if I uncheck this button right here, you'll see how quickly the software loads up all the highs, the lows, and closing prices of previous years. I'm just going to go to the chat box. Guys, can you just give me a quick yes that you guys can see all the pink line levels? Yeah. Okay. Fantastic. Okay. Right. Lots of yeses coming through. Okay. So you can see how good the software is. If I want to look at previous highs, previous lows, I can do that, and I can manipulate the software. I can go into the back end. I can click on that tool, and you can see that the intervals is set at yearly. I can change this, and I can say monthly. And you can see now how quickly the software has changed it to all the monthly highs, lows, and closing prices. Can you guys see that? Can you guys see, quick yes please, that you can see the little pink lines representing the monthly highs, lows, closes? I know it's not very clear. Yep, okay, fantastic. Thank you. Lots of yeses coming through. Okay, so that's just the power of the software. Now, we need to look at the previous year, so I'll take it back to the previous year, and I'm going to check this box so that it only shows 2014. I want to keep my charts clean. Do not clutter your charts with loads of lines and start bringing on Fibonacci's and regression trend channels and fib extension, pivot levels. Keep things very clean. The monthly chart paints a very clear picture of major areas of support and resistance. One of the mistakes that a lot of people make is that they're trading on lower time frames, and because they're trading on lower time frames, there's a lot more candlesticks. There's a lot more candlesticks, there's a lot more noise. If there's a lot more noise, there's a lot more irrelevant support and resistance levels. Okay, if you look at this trend has been down since around 0.95 to 0.7. You're looking at about 2,500 pips on the monthly chart. So think of all of those intraday support and resistance levels that have been broken on the 1 hour, on the 15 minute, on the 4 hour. Price is just headed down. So by looking at the monthly chart, we get a very clear picture of this. Beyond these two levels of support and resistance, we then look at round numbers. Round numbers are very significant. Round numbers happen at every 1,000 pips. So looking at the Aussie dollar, US dollar, 1.10, round number, 1, 0.9, 0.8, 0.7. Now, just to show you how price interacts with round numbers, if I just open up the chart, you can see that price is currently around 0.70. And what are we seeing so far this month? We're seeing indecision, and that's natural. Price is at a round number. We usually expect to see some kind of indecision around this level before a continuation. The mistake that a lot of people make is that they find an indecision candle at a support level, and then they'll start to go long, thinking that they found the bottom of a trend. It's actually an incorrect approach. What you want to be doing is going in the direction of the trend. There is more chance of the trend continuing than a bounce to the upside. The odds are always in the favor of the trend. So what we want to do is be patient at this point. This is where we don't trade. We wait for price to dictate a trend direction and then go in that direction. But for visual purposes, you can see how price is interacting with that round number. It's showing indecision. Okay, that's the monthly chart. So in summary, the monthly chart is used for major areas of support and resistance. If I go to the weekly chart, now I'm just going to open up this naked chart. The weekly chart, this is a naked candlestick chart. So there's nothing on here apart from your bog standard red and green candles. However, if you go to the next page, you can see I've got the weekly 200 moving average, and I have our proprietary trend filter. So if you look at this level here, you've got your red, green candlesticks. If you look at this trend filter, it's just solid red. So what that's telling me is that the trend is down. So now what are the two things together? The 200 moving average is used to give a bias in price action. This is not my approach. This is an institutional approach. This is an approach that goes back to before the internet. Before the internet, traders were very particular about the kind of information they put on their charts. They didn't have the time to day trade because everything was drawn by hand. The 200 moving average was proven to be a very good indicator for long-term trend direction and bias. So the 200 moving average gives us that bias. So above the 200 moving average, it's a bull market. Below the 200 moving average, it's a bear market. Okay, then within that, I want to look for bullish and bearish trend. So below the 200 moving average, I look for the trend filter to be red. That's giving me a bearish trend in a bearish bias. And above the 200 moving average, when I have a bullish bias, I'm looking for the trend filter to be green, suggesting a bullish trend. Where there is red, this is a proprietary indicator, guys. There's some questions coming through asking me, what is this indicator? It's a proprietary indicator. So this is not an indicator that is readily available. This, again, comes with having good software. Okay, so if you guys want to know more about the software and the indicators, then please, I'll give you my email after the webinar. We can talk about how these proprietary trend filters work. Okay, so above the 200 moving average, we've got the bullish trend filter. That's what we're looking for. Below the 200 moving average, we're looking for the bearish trend filter. Notice how long it's red for. If you look at the dates at the bottom, we're looking at August 2014. That's that big red bar there, August 2014, all the way to what we're in now, which is September 2015. So well over a year. Okay, you're looking at about a year and a month now, and that trend filter has remained red. That's how long this has been in a downtrend for. Okay, if I go to the if I go to the daily chart, I've got the same logic. 200 moving average giving me a bullish and bearish bias, and then the proprietary trend filter giving me areas of bullish trend and bearish trend. When I'm above the 200 moving average, I want the trend filter to be green. Below the 200 moving average, I want the trend filter to be red. So notice I've got a multiple screen setup. I've got the monthly, weekly, and daily. Each one has its own purpose, but I then use all three of them in unison. It's crucial to be using multiple charts. You don't want to be using just a single chart. And if you are using a single chart, say, for example, the 1 hour, what I would suggest is go up a chart and then go up a chart to start bringing that chart in as well. So don't just focus on the 1 hour. Bring in the 4 hour, bring in the daily. Ideally, you really want your minimum and then the weekly and the daily as your two larger time frames. Okay, so putting all three together, how do I do this? It's very, very simple. The monthly chart gives me clear areas of support and resistance. On the monthly chart, I'm looking for price to move thousands of pips, not tens of pips, not hundreds of pips, thousands of pips. So I'm looking for large areas where a trend can develop on the monthly time frame. I then go down to the weekly, and I want the weekly to be, say, for example, if it's in a bear market, excuse me, I want the weekly to be below the weekly 200 moving average, and the daily to be below the daily 200 moving average, and I want the trend filter to be red on the weekly and the daily time frame. So I want the weekly and the daily time frame to be in alignment, bullish bias and a bullish trend. In the bull market, I want price to be above the 200 moving averages on the weekly and the daily, and I want the trend filter to be green on the weekly and the daily time frame. This is now telling me high probability environments where a trend can potentially develop. Okay, remember, nothing in trading is guaranteed, so we want to stack the odds in our favor. Okay, can I get a quick yes that you guys understood my chart setup, please? Thank you. Yep. Okay. Okay, brilliant. Thank you, guys. Okay. Alrighty. So now let's go ahead and do some analysis. We are going to start with the Aussie dollar, US dollar, and that's because not just because it's on my watch list, not just because it's at the top of my watch list, because it's actually a currency that's in trend. We can quite clearly see it's in trend, and it's a currency that I have multiple positions running already. Excuse me. Okay, I have multiple positions running already. So let's start with the monthly time frame. Long-term trend is bearish. Okay, and look at the natural rhythm. We had a trend to the downside, then we went through a period of consolidation. When price went through a consolidation, this is where we stood aside. This is where my positions, which were running along the first leg of the trend, they got stopped out in this consolidation. Price went through this consolidation for 1, 2, 3, 4, 5 months. Then in the 6th month, we had a breakout to the downside, which is the month of July. This is the month of July. We had a breakout to the downside. Okay, and this is where we started entering our short positions again. Notice, guys, the breakout. The breakout is in the direction of the trend. We can't expect price to just continuously go in one direction. We can't. We have to expect some kind of breather period. And notice where that breather period happened. This consolidation period happened around the round number 0.80. So you can see how it's interacting with round numbers. We now have seen price move towards 0.7. Ideally, we want to see the trend continue to 0.6 and potentially 0.5. And if you look, it has been at this level before here, and it's been at this level before here. So we want to see price move towards 0.6 and 0.5. Okay, on the weekly time frame, price is trading below the weekly 200 moving average. So the bias is bearish. And the trend filter is red, suggesting that the trend is also bearish. So there's no reason for me to start going long on this. Everything is suggesting further weakness. On the daily time frame, price is trading below the daily 200 moving average, and the trend filter is also red. I started entering short positions around this level here in July. So if you look at prior to that, let's just take back price action. We had a trend to the downside. I then got stopped out, I believe, around this level here where my trend filter changed to green. So I got stopped out around here. Price then went into consolidation. And then when price broke out of this consolidation, this is where I started entering short positions. I've got several positions running at the moment. Now, if you notice what is happening, there's a correction to the upside. This is not a trend reversal. So people who are going long are actually going against the major trend. Now, of course, this may continue to the upside. And if that's the case, then they got lucky, because how many times during the length of this trend have we seen moves to the upside and then the overall trend to the downside has continued? There is more chance of the trend continuing than a correction and a continuation to the upside. So what am I waiting for? What I'm waiting for is a reversal back to the downside. I want price to clear 0.70. I want it to break this pivot support level, and I want a continuation to 0.60. Now I have positions in play. If price does continue to the upside, I've got a trailing stop loss which will be triggered, and I won't have lost any money. I will have made a little bit of profit, nothing that's going to change my world drastically, because this is still quite a young trend. Remember, trends can stay in play for months at a time. I've held trades for up to 13 months, compounded positions for up to 13 months. So for me, this is just the start of a trend. If I get stopped out, how many trades do I have in total along here? I believe I have 4 trades running. I have 4 positions running. Okay, so if price breaks and closes below this level, this is where I'm going to start adding further positions. Okay, guys, did you guys understand that analysis? Can I get a quick yes that you guys understood the analysis? Okay, fantastic. All right, brilliant. So going forward, I'm going to be a little bit quicker with my analysis, okay? So at the moment, okay, quick question. If you are not short on this, if you don't have any positions running, should you be trading this now or should you be standing aside? What should be your stance? Trade or stand aside? Yeah, fantastic. Okay, good answers, guys. Yeah. Yep, okay, fantastic. Exactly. You should be standing aside. Okay, you should be looking at the bigger picture. A break and a close below this support will mean a continuation. Stand aside until then. Okay. Thank you. Let's move on. Next currency we'll look at is the US dollar, Canadian dollar. Start with the monthly time frame. Long-term trend is bullish. We can see that the trend has actually been heading in an upward direction since 2011. It's trading above the high of 2009, which is acting as a support level, and it's trading above 1.30. Okay, quick question to the group, guys. Where would we like to see price move towards on this particular currency? Give me a value using the scale on the right hand side. Which kind of highs would we like to see price move towards? Okay, thank you. 1.4, not a bad guess. Any other guesses? 1.6 would be perfect. Good, I like that answer. So in between 1.4 and 1.6, what do we have? Yep. Okay, perfect. Okay, all of these are very, very good answers. They're all very good answers. The first level is 1.4. Ideally, we'd like to see price move towards 1.6 because it's the high of this chart. Okay, it has been that high going back to 2002. However, 1.5 is what we call a half figure. And 1.5 will be a very strong resistance. If price breaks 1.5, then ideally we'd like it to go to even 2, 1.6, 1.7, 1.8, 1.9, even 2. Okay, but the first level that we would really see price move towards is 1.4, but ideally 1.5, and actually really and truly 1.6. So we do have space for a good 2,500 pips. Okay, if we go to the weekly time frame, price is trading above the weekly 200 moving average. So we have a bullish bias. Trend filter is green, suggesting a bullish trend. Apart from this one red bar, these one or two red bars here, the trend has been bullish going back to November of 2013. The trend filter has remained green. On the daily time frame, we're trading above the daily 200 moving average, and the trend filter is also green. Now, I have a single position running on the US dollar Canadian dollar. That position was triggered around here. And you can see now that that position has come, once I was triggered, price went against me and it's now come back up. And it's now basically going into a bit of a squeeze. Okay, so what we want to see is a break and a close above this resistance level. A break and a close above this pivot resistance will suggest a continuation. Now, guys, notice something that is very important. Okay, I can see some questions coming through. I'll answer them in a second. Something that is very important is expect a trade to go against you before going in your favor. Guys, I'm just going to get a sip of water. Please bear with me. Now, one of the mistakes that I shouldn't say mistake, but one of the approaches is a better word. One of the approaches for most traders is they want instant gratification. As soon as they are in a trade, they want to make profit. Get in, get out. It's a very difficult way of trading. It's a very inconsistent way of trading. The natural rhythm to price is usually to trigger you into a trade and then to go against you. Okay? So if, for example, if you look at this level here, when price broke above this pivot, so this bar here, this is when I started entering my long position. Now notice what happened soon after that. Price went against me. So where my crosshairs are, for example, that's where I entered. The horizontal level of the crosshair. That's where I got triggered into the trade. Price went against me, came back to retest 1.3 and has since gone and then bounced back to the upside and is now going into this squeeze. A lot of traders, if they'd gone long, because they're trading on a lower time frame, a 1 hour or 15-minute, they would have been triggered out of this trade. Stop losses would have been hit and they would have been stopped out. Now, one of the questions I think has been asked is how wide is my stop loss? The simple answer is that the wider the better. My stop losses are wide. My stop losses can be as wide as 400, 500, 600 pips, depending on the average true range. I let the average true range guide me. Think about it. If the average true range of a currency is 90 pips a day, and you have stop losses of even 50 pips, you have a very good chance of being stopped out. So what you really want to be doing is looking at that average true range and letting that guide you. So if the average true range is 100 pips, you want the average true range to be at least 101 pips, if you understand what I mean. It has to give the currency that 100 pip movement, that 100 pip range for it to move in without you being stopped out. Guys, can I get a quick yes that you guys understood that? It's very, very important. Okay, the average true range should guide you. Can I get a quick yes, please, that you guys are understanding what I'm saying here? Okay. The most important thing in trading, and regular guys, a lot of you guys, I can see the same names in the list. A lot of you guys will have heard me say this again and again and again. And that is that the most important part of trading is the exit management. Compounding and exit management are the two most important parts of trading. So, of course, risk management, etc. But assuming your risk management is on point, 2%, etc. The exit management and the compounding, the way you compound, are fundamental to longevity in trading and growth. Okay, so everyone understands what entries are. We've seen them. I see people talk about it all the time: breakouts, pullbacks. go down to a lower time frame, bounce off a moving average, pull back to a Fibonacci level. Everyone seems to have a method of entering. However, the least understood process of the least understood part of trading by most traders is exit management, and that's actually the most important. Okay. Yeah, I use the ATR on the daily time frame. That's a good question, by the way, Alexander. My exiting and my entry and exiting is done on the daily chart. Okay, so not only do I look for trend direction and bias on the daily, it's also where I enter and manage my stops. Okay, so looking at the US dollar, Canadian dollar, a break and a close above this pivot resistance will suggest a continuation. That is when I'll start compounding. That is when, if you are not in this trade, where you can start looking to open long positions. We want to see price move towards 1.4, then 1.5, and then even 1.6. Okay, you're welcome. US dollar, Canadian dollar should be on your watch list. Okay, I'm just closing down the chat box, and I'm opening up the pound Aussie dollar. Okay, pound Aussie dollar. Start with the monthly time frame. Long-term trend is bullish. There's no reason to be going in any other direction other than in a bullish direction. Now we can see that price is going for a bit of indecision. Why is it going through indecision? Well, it's faced with resistance. It's faced with resistance at the 2.3 round number. So what we want to see is this resistance level cleared, and for price to move towards 2.5, potentially even 3. So you can see that there's still plenty of space for this trend to develop, but we really need to see this resistance cleared. If you're not in this particular currency yet, then you need to be patient. On the weekly time frame, price is trading above the weekly 200 moving average. Trend filter is green. On the daily time frame, price is trading above the daily 200 moving average, and the trend filter is green. Now, I have positions running already. My positions have been running since price cleared the figure 2. Okay, so this is going back to June of this year. This is when I started entering long long opportunities. Yeah, I've seen some questions, guys. Some questions I'm going to answer at the end. So you can see that price has broken above the figure 2 at this level here. This is when I started entering long positions. And you can see now that these positions have been open for 1, 2, 3, coming into the 4th month now. These areas where price just sort of oscillates, it's going sideways, I'm simply holding. There's nothing to suggest that price is coming to an end, that the trend is coming to an end. I'm simply being patient. When price breaks and closes above this level, when price breaks and closes above this pivot resistance level, this is when I'll start adding further positions. This is when I'll start compounding. If you're not already in this, this will be an aggressive entry, or you could wait for 2.3 to be cleared. It really depends on your trading plan. Okay, but I already have positions running, all in very good profit, a break and a close, and I can start adding further positions. Okay, pound Canadian dollar. Right. Long-term trend is bullish. Last month, we had a bit of a move to the downside, but look at what's happening this month. This month, we're seeing correction back to the upside. So whatever ground was lost in the previous month, we're now seeing price start clawing that back. If it breaks and closes above this pivot resistance, which is also the round number 2.10, we can then see price move towards 2.2, 3, 4, potentially even 2.5. So we want to see price cover this level, move to these levels. Weekly time frame, price is trading above the weekly 200 moving average. Trend filter is green. The daily time frame, price is trading above the daily 200 moving average, and the trend filter is green. What we've seen is a pretty deep correction to the downside. Price has come back to retest this level, and it's found support at the figure 2. Again, Again, we can see how price has reacted to a round number. Came back to that level, bounced to the upside. This is now just an area of consolidation. If you're not in this trade, then you really want to stay out of this trade, because this is not doing anything. What you want to be doing is waiting for price to clear 2.1. When it clears 2.1, when it clears 2.1, this is when we can start adding positions. We can actually start entering positions. If you're not already in this, some traders will already be in this based on this initial breakout. They'll be stuck in this area of consolidation, which is fine. This is just where patience comes in. A break and a close above here, we can start adding further positions. If you're not in this, stand aside. Don't start chasing. Don't start guessing. Never predict. Let price dictate. Okay. Okay, euro dollar. We went straight past the euro dollar. There's a reason why we went straight past the euro dollar. Can I ask you guys why I have not looked at the euro dollar? There's a very good reason. Any suggestions? Right, exactly. There's no trend. I got stopped out. Yep, I got stopped out after I held my position for about 8 months. So I was short on the euro dollar between September and May, and then I got stopped out in May. Okay, and since then it's just been in consolidation. All right, and we'll have a look at it in a second. But if I haven't looked at a currency, there's a reason why I haven't looked at the currency, and that is because it's a ranging market. Now, people are obsessed with the euro dollar, and that's a very incorrect approach. A good trader is not obsessed with any particular currency. You have no attachment. You don't have any love or any desire to want to trade that just because you really like it. You don't really like it. You only trade something for as long as it's paying you. Don't trade gold because it's all shiny and pretty. Okay, forget that. Right? Don't trade platinum because hip hop stars have it in their teeth. Yeah, you don't. I'm making a bit of a joke about it, but this is the reality. It's these little things that come into our psyche, and we then have attachment to things because the system has conditioned us to appreciate certain things because of their properties. Gold, it sounds wonderful, but as a chart, it doesn't make it attractive. The euro dollar is not attractive. Gold is not attractive. Crude oil at the moment is not attractive. Silver at the moment is not attractive. The currencies that are attractive are the ones that we are looking at. Aussie dollar, US dollar. US dollar, Canadian dollar. Pound Aussie dollar. Pound Canadian dollar. These are the currencies that are looking attractive. And this is where your attachment should be for now. As soon as these currencies stop paying you, you drop them and you move to something else that is attractive. Okay, you have to embrace this philosophy. This is the whole point of having a portfolio and portfolio management. Yeah? Okay. Pound New Zealand dollar. Long-term trend is up. You can see it's been up 1, 2, 3, 4, 5 months now. Bullish. It's trading above this pivot resistance, which is the resistance of 2000, well, the support level of 2005, which is now again support. It was resistance, it's now support. It's trading above 2.4. What we need to do is wait for the pivot high of this candle to be cleared. Once this pivot's been cleared, we'd like to see price move towards 3, ideally even 3.5, 3.7, which is as high as it was in 2000. So there's still plenty of space for this trend to develop. Weekly time frame, trading above the weekly 200 moving average. Trend filter is green. Daily time frame, trading above the daily 200 moving average. Trend filter is green. I have several positions running already, multiple positions running. These have all been running since price cleared 2.1. So when price cleared 2.1 in May, it was around this level here where I started opening rather long positions, and I've strategically compounded. So you can see now that all of those positions are now in very good profit, heavily in profit. When price clears 2.5 and when it clears the high of this number, this pivot rather, so around what is the high of this? Around 2.5346. When it clears this pivot resistance, this is where I'm going to start adding further positions. Now, one thing to note, if we take price action back to this particular bar, which was like 2-3 Mondays ago, we had a particularly volatile day. Big movement to one side, to the upside, and then 50% retracement during the day, intraday. We can see that. Big move to the upside, then retracement. It's these kind of candlesticks where you do not want to get caught up. This is where Traders lose a lot of money. Okay, if they make a bit of money, happy days. But it's purely luck. If they use that approach consistently, they're not going to get anywhere. The key to note, though, is if you look at what's happened since, price has just gone back to its natural rhythm. It's just gone back to its natural rhythm. These are regular size bars. There's nothing unusual compared to the bars before. So things like this kind of behavior is very common, where you have a very volatile day, particularly on a particular day, but then price corrects itself. Look at what happened straight after. Straight after, price corrected itself and then went back into trend. When it breaks and closes above here, we're going to see a trend continuation. Okay, yeah, I mean, a lot of pips, and there's nothing to suggest that this is not going to end. Guys, between September, just so you guys understand, between September and May, September of last year and May of this year, I took 25 trades. By the time I got stopped out with over 55,000 pips. And for very good percentage returns. Very, very good percentage returns. Only 25 trades. And remember, I'm trend trading. This is all happening in the background. I'm not working for this money. My money is working for me. I'm simply holding and managing. If you're day trading, you're working for your money. You're working for your money. Okay, what you want to do is reverse that logic and get your money to work for you. Day trading can work. You can make some kind of living from it, but it's not an empowering lifestyle. What you want is more time and more money. Trend trading will give you that. Okay, last currency we'll look at, and then I'll answer a few questions before we'll call time on the webinar. New Zealand dollar, US dollar. Trend is very much bearish. Currently seeing indecision this month. That's fine because we've had 4 months of weakness. After 4 months of weakness, we cannot expect price to continuously weaken. There has to be a slowdown period, and that's happening this month. We want to see price move towards 0.6, 0.5, 0.4. That is what we want to see the trend develop. Excuse me. Weekly time frame. Below the weekly 200 moving average, so we have a bearish bias. Trend filter is red, so we have a bearish trend. Daily time frame. Trend filter, price is trading below the daily 200 moving average. Bias is bearish. Trend filter is red, suggesting a bearish trend. Now look at what happened again, guys. There's that same Monday we just talked about, a particularly volatile day, 50% retracement during the day. And look what's happened since. Price has gone back to its natural rhythm before this particular day. So it's slowly moving back. This is what we want. We want slow, neat trends. We don't want these erratic periods. We want a slow, steady trend where we can compound and manage the trades without any stress. We just want to see nice, consistent growth coming into our account. I've got positions running since price cleared 0.70. Yeah, that's correct. Since price cleared 0.70, that's when I started entering short positions, and these are now all in good profit. When price breaks and closes below this pivot support, I'm going to start adding further positions. I'll start compounding again. Okay, that's the analysis for today, guys. Make a note of the currencies that we looked at. Aussie dollar, US dollar, Canadian dollar, pound Aussie dollar, pound Canadian dollar, pound New Zealand dollar, US dollar. Okay? This kind of trading is boring. Yeah, exactly. Thank you, Addy. It is boring. Guys, trading shouldn't be exciting. You know, if you want excitement, go to Vegas. Go to a slot machine place. You know, go and play on a fruit machine. That's excitement. Trading should be mechanical. Trading should be boring. Trading should be repetitive. There should be absolutely nothing exciting about this. If you're having fun doing this, then you're probably not making money. That's George Soros. That's not my expression. That's George Soros. George Soros, he made $1 billion in a day. I think he's pretty good at what he does. Okay, so I would listen to that kind of advice. Keep it boring, keep it simple. Okay, have a trading plan and follow it through. Okay, there's one last question I'm going to go back to, which I believe FX Boyke asked me. How long are these trades supposed to last? How long's a piece of string? It's a very difficult question for me to answer. because a trend that you just want to keep on going in that trend. If a trend is in play, you want to keep on going until that trend ends. When does a trend end? I don't know. All I do is I use the round numbers to direct me. If it breaks a round number, I'm going to use the next round number. Do back testing. See how price reacts with round numbers. If it breaks one round number, it moves to the next one. Then it moves to the next one. I have a trailing stop loss that locks in good profit as the trend develops. I have a way of tightening my stop, so I can manually tighten stop losses if I need to. I don't ever close positions. I can tighten stop losses if I feel like I have the confluence of events. Okay, FX Boyke, do you want to rewrite your question in there quickly, because I can't seem to find the question. Okay, guys, 1 more minute and then I'm going to call time on that. I hope I've answered everyone's questions. Okay, if you do have any questions, then please email me on zaheer@tdtpro.com. I've just sent it over to you, zaheer@tdtpro.com. Okay, question is, how do I know when a trend is going to start? I just went through it, guys. I just went through it. Confluence of events. I'm looking for the trend filter to be red on both. I'm looking for the weekly and the daily time frame to be in alignment. I'm looking for round numbers to be broken. Okay? These are the levels that I'm looking for. So when price clears a round number, that's an entry point. Okay. I don't do any demos, guys. I don't believe in demo trading. Okay, trading is a business, so you need to come in with a certain level of investment. I don't ever do any sort of selling on these webinars, guys. It's just unnecessary for me, and I'd like to have a very, very different approach to what most people out there do, who are constantly bombarding you with signal services and etc. etc. That's not how it works here. If you guys want to know more about the training and the mentoring and the software and the community and the stocks training, the FX, everything that we do, if you want to know more about this, then please email me. Okay, email me at zaheer@tdtpro.com. I just put that email through earlier. Now, finally, guys, if you are not on Instagram, or rather, if you are on Instagram, please follow me. My Instagram is fx.mentor. Okay, I put a lot of good stuff on Instagram. Okay, a lot of good stuff, a lot of useful tips, all about trading. The ins and outs of trading, etc. So if you're not on Instagram, please open an Instagram account and follow me, and please get in touch. Okay, these indicators are proprietary. These are our indicators. So again, if you want to know more about the indicators, if you want to know more about the mentoring, please please email me at zaheer@tdtpro.com. Okay. Thank you very much, guys. I hope that was good. Have a great day, morning, afternoon, wherever you guys are. Take care. See you soon, guys. Bye.